Hi and welcome to ECCB Connects, a program produced by the Eastern Caribbean Central Bank to share with you who we are, what we do, and how we serve you. On this episode, we sit down with Governor Timothy N.J. Antoine to explore the ECCB's Program of Action for Recovery, Resilience, and Transformation of the Eastern Caribbean Currency Union. Stay with us. We'll be right back after this message.
The Eastern Caribbean Central Bank is rolling out Dcash, the next step in the evolution of the EC dollar. Use Dcash to send and receive money to and from friends and family. Make payments directly from your smart device. Make payments from wherever you are. Download the app from the Google Play or Apple Store and sign up, or visit dcashec.com for more information. The future of the EC dollar is digital. Let's make history together.
The ECCB has crafted a program of action with initiatives at the national and regional levels to transform the Eastern Caribbean Currency Union. The program of action is the brainchild of Governor Timothy N.J. Antoine, and he has joined us to discuss the key themes of the initiative. Governor, welcome to ECCB Connects.
Thank you, Sean. It's good to be back on Connects.
A program of action for recovery, resilience, and transformation of the ECCU. We've heard so much talk during this season, I can almost hear somebody say action. Tell us, what prompted this initiative?
Well, thanks for asking. I think the first thing was just the lessons of the pandemic. There are several lessons that emerged very clearly from the outset of the pandemic and, of course, reinforced throughout this long, seemingly never-ending pandemic. And we wanted to leverage those lessons into a coordinated program of action, a coordinated action plan, simply put, with, as you said, actions at both the national and regional level. So the prompting was the lessons, but I also think it was important for us, even as we focus on our response, on the issue of recovery, that we never lose sight of the need for us to be relentless in our pursuit of building resilience and ultimately transforming this region. So the name Program of Action for Recovery, Resilience, and Transformation speaks to the fact that while we focus on the current, the immediate, we must always, of necessity, continue to build resilience in this region so that we are in a better shape for the next shock, and ultimately to continue to pursue our transformation agenda, which at core is about how we lift all the people of this region and create an atmosphere for shared prosperity.
No doubt there are a number of areas that this program of action will seek to address, but what is at the top of the agenda, the priority areas?
So we've identified 4 pillars for this program of action. And again, program of action, action plan, same thing. The pillars are as follows. 1, financial stability. 2, fiscal and debt sustainability. 3, resilient and inclusive growth. And 4, payments modernization and digital transformation.
Explain why those particular areas.
Well, it's a recognition of what our region, we believe, needs. First of all, we need to come together. We need to come together. But before I go into the pillars, let's step back a little bit and just talk about the lessons, because you asked me initially what motivated this program of action. Several lessons, and I'll just name 5, but I think at some point in the past I've identified 9 or 10 lessons from this pandemic for the ECCU. The first was the criticality of connectivity and digital tools. And I don't think I need to say a whole lot on that. The fact that how we work, worship, go to school right now, especially for our children, shop, among other things. All of those things have been overnight changed, disrupted, upended by the necessity for us to find connectivity, and use digital tools. So that was the first key thing. And of course, what it exposed is the connected and the unconnected, the digital divide. The second lesson was the absolute necessity for fiscal buffers. What is a fiscal buffer? A savings, a set aside for the rainy day. because as my grandmother said, as my mother always said, the rainy day always comes. And we don't always know how it's going to come. Typically, we think of a hurricane, a storm, maybe an earthquake, even more infrequent, a volcano. But what we've had is a pandemic, the first time in our lifetimes for most of us. And so what that experience reinforces is that we must have some kind of buffer, some kind of cushion to take us through a difficult period. In basic finances, we talk about having an emergency savings, an emergency fund of, say, 3 months' expenses or 6 months. That is true for individuals, it's true for businesses, and it ought to be true for governments. Connectivity and digital tools, fiscal buffers. I think the third important lesson was the importance of our primary healthcare system. This is a health pandemic, but what we are also seeing is that persons with underlying conditions, so-called comorbidities, for us in this region, a big word, it simply means things like diabetes, hypertension, heart disease, for example. Those persons are at higher risk of succumbing to COVID. And that is in fact what we've seen. So it goes back to the issue of the NCDs, the non-communicable diseases, the same hypertension, diabetes, and heart disease, and so on. Because in our region, in the Caribbean, according to CARPHA, almost 8 out of 10 deaths in our region before COVID are directly attributable to these diseases, the so-called NCDs, non-communicable diseases. So imagine this was a situation, that's a pre-existing condition, if you will. And then you bring a pandemic on top of that, and it really puts the pressure on. So it goes back to the issue of primary health care. Why primary? Because prevention is better than cure. If you have to go to a hospital, not only are you not sure about the facilities at the hospital, and it varies from country to country, but there's a whole lot of expense associated both for the individual and the state to provide those services. And never mind secondary, tertiary, when you need even more higher level care. So you want to, at a very primary level, at a basic level, have healthier lifestyles, right? It saves lives, and of course it saves a ton of money. We also saw another lesson as food and nutrition security. And this came home, Shanna, very clearly when we were worried, some of us, for a while, about whether the ships will arrive on time for us to get our favorite foods out of Miami. Wherever they come in the world, typically they're routed a lot of cases through Miami. And you saw a lot of frantic and panic buying and shopping, running out of all sorts of things, including toilet paper, for whatever reason I couldn't understand. I still don't understand why. But some of it wasn't rational, but it's the fear of not having or being without. And so people did strange things, but I suppose rational things in their mind based on what they felt. But the point there was, if we really, as a region, did not have those ships come on time, how would we eat? Would we starve? And why should we starve in this region of fertile land and the potential for abundant, rich, food, natural food, healthy food? And so it raised the issue. What are we doing about feeding ourselves? And then the other lesson, and I said I'll just mention 5, there's several others, is the need for cooperation. Cooperation at the international level, cooperation at the regional level. So if you think internationally, think about the need for us to galvanize support for vaccines and make them widely available so that everybody has access. Because as the saying goes, no one is safe until all of us are safe. But then there's also the issue of regional cooperation, the coming together of our countries at the CARICOM level, at the OECS level, at the ECCU level, to really work together. And I think we've done this quite well in some instances in this pandemic. And I feel we would not have fared as well as we have fared, relatively speaking, without that sort of regional cooperation. So again, what it reinforced, certainly for us at ECCB, is the absolute need for regional cooperation for collective action. So, in sum, connectivity and digital tools, fiscal buffers, primary healthcare systems, food and nutrition security, and international and regional cooperation. Those are 5. I'll leave it there. But those were lessons which helped to shape. And then, of course, the need for a coordinated collective action plan, which is what the program of action is. So those are the 4 pillars I mentioned. Just to repeat, financial stability, fiscal and debt sustainability, resilient and inclusive growth, and payments modernization and digital transformation.
Important lesson, and certainly it explains why the focus on the particular pillars. So give us a status update as to where we are with the implementation of the program.
Right, so I will simply limit my comments to the regional actions, because at the country level, the actions are being taken by country and they vary widely. Some are doing, they're doing different things. And we are very clear that the program has to be sufficiently flexible to allow for country-specific priorities and circumstances. Because yes, we're similar, but there are things that are more urgent in one country or another, and that's for the countries to decide. So what we focus on at the level of ECCB is certainly the regional actions where we have a direct role to implement. The countries, of course, have to implement the national actions. So let me start with the financial stability. And a couple of things I'll just mention. There are more. We have come together to look at the question of an optimal regulatory framework, how we do the overall supervision of the financial system between the ECCB, the national regulators in country, and the Eastern Caribbean Securities Regulatory Commission. And we were able to have that basic framework approved to how we will divide up that. It's one system, so if you don't coordinate the system, chances are there will be weakness in areas which can be exploited, what we call regulatory arbitrage, and ultimately destabilize the system. And so we've come together as regulators and we agreed on that. Another very important thing was the issue of the credit bureau. And that's not a new idea, but we brought urgency to getting it going because the issue of access to credit is a very important issue for economies, and it can go both ways. You want access to credit for businesses, but when you have bad credit, it also means the appetite for banks and credit unions to lend diminishes. As bad loans go up, they tend to be even more skittish, more reluctant to make loans which are needed for our economy. So this issue of, for a credit bureau, I always tell people, it's for responsible borrowing and responsible lending. It works for both the borrowers and it works for the creditors, the financial institutions. Both benefit. Typically for a borrower, it means that they get lower interest rate if they have good credit scores and they have greater access. And of course, for the financial institutions, they make better credit underwriting decisions, which loans to make and which loans not to make. Another area on the fiscal side, quickly, I'd mention is this pandemic has hit us very hard. And our governments have had to spend monies which, frankly, they do not have, which means that they've borrowed. In our currency union, at this moment, our estimate, based on our numbers we've seen and we've gathered from the countries, is that we have spent at least $1 billion in 2020 during the pandemic. And by the way, I think most people know by now that we experienced the single greatest economic shock, growth shock, of 17% contraction, 1.7. And to help our governments, to be able to deal with revenues significantly down, to spend for COVID relief, stimulus programs, COVID-related expenditures, and so on, our governments borrowed. And so when we looked at our fiscal anchor, which is the debt to GDP ratio of 60% by 2030, it was very apparent in this environment where tourism, our mainstay, is decimated and is unlikely to recover before 2023, 2024, then it would be very difficult for our governments to be in a position to basically deliver on that fiscal anchor of 60% by 2030. And so after much deliberation, internal discussions at the level of our Monetary Council, we agreed to shift that out to 2035. So instead of 2030 for 60%, 2035. Because here's what happened. At the end of 2019, Shana, we were at around 65, say 66% debt to GDP ratio. By the end of 2020, that had dramatically risen to 87%. 87%. And a lot of that had to do with the need for the extra borrowing, but also the growth shock, meaning the GDP, which is the denominator in that ratio, significantly fell. So to give our countries more time to be in a position to basically make the adjustment, see the tourism sector recover, the tourism industry recover, and to get back on track, fiscally speaking, we took a collective decision to push that out. That is important because it sets the fiscal framework for our governments, and it also sets expectations in respect of our relations with, say, the IMF, the World Bank, the Caribbean Development Bank, which all look at these numbers when they're making decisions about when to lend and how to lend, because we need access to money. If we did not address that, then they would be saying, well, we can't borrow because look at the target. So we all agreed COVID was an exceptional situation. It required an exceptional response. We needed time to get the economy to recover, tourism in particular. That would take us several years. And in the meantime, we needed to be able to provide the requisite support for the economy. So that was an important decision. The related action there at the regional level is the need for us to continue to look at building fiscal resilience. So even though we push out the fiscal anchor to 2035, that does not mean that our country's governments must not continue to be fiscally prudent. And ultimately, to again build back reserves, buffers, the lesson we learned, for the next rainy day. Who knows what that will be, when that will be. But one thing we know, shocks will come. Another rainy day will come, sooner rather than later perhaps. So those are the two action points that I want to mention under the fiscal and debt sustainability. Now, in terms of the resilient and inclusive growth, I want to mention a couple of things. First, the issue of food and nutrition security. So what we've agreed for this program of action is to try to get our food import bill slashed by 25% over a 3-year period. Okay, so looking at the 2019 number, which was 1.6 billion food import bill, EC dollars that is, what can we do to get that down to 1.2 billion by, say, 2023, over a 3-year period? And that would mean, obviously, a savings of about $400 million. That is a discussion we're having now in terms of coordinating, but that is the target. The other thing I'd mention under resilient and inclusive growth is renewable energy. So the central bank has taken an initiative, again endorsed by our Monetary Council, as part of the program of action, to develop a renewable energy facility. Why are we doing that? Because right now, in our currency union, renewable energy in our energy mix is about 10-12%. That is way too low. It's costing us significant money, foreign exchange, and of course, carbon emissions. And we know that we can save significant money. And I always remind people the old saying, a dollar saved, a dollar earned, where foreign exchange is concerned. We can save foreign exchange, and we can create jobs, which is very, very important as we think about the recovery and the long-term sustainability of our economies. So we are working on this major, major initiative. I'll not say more now because I think we plan to have a launch in due course, but that was well received and endorsed, and we're working with the World Bank and other international players to deal with that issue of renewable energy. And our hope is that we'll be able to double renewables by 2025 from where we are now, so we should hopefully get about to 25%, and then we want to triple by 2030. So it's a lot of heavy lifting to be done, but we have the potential as a region to do it. We do need to raise financing. That is a key issue. And then we have to, of course, address the policy regulatory environment, which we are working on as part of that renewable energy facility. And then the final area you ask about is the payments, modernization, and digital transformation. And I would simply remind us of the fact that we've launched Dcash, or digital currency, the first monetary union in the world to launch a digital currency. We've done that. And of course, we'll be building on that. We're in 5 countries. We expect to be in Dominica, Montserrat, and Anguilla very soon. That will be all 8. And then you're going to see significant marketing of Dcash, because we haven't done marketing yet, to see everybody really understand what it is, the exciting possibility of that innovation. And then, of course, we've also been doing other things in the payment system. We're working on a completely new payments framework to allow other fintechs, other operators, small businesses in our region to have the opportunity to do business in a digital world, to do digital payment, do digital business, to create digital trade. Because I always make this point. In this period, we must not simply be consumers. We have to be producers in this digital economy. That's only how it makes sense and will bring benefits for people and the shared prosperity we talk about. And we've done other things like virtual assets, build a framework for virtual assets. And some people will say, well, these things are not money in people's pocket. They are the enabling environment, these pieces, for you to make money, for you to thrive. If you don't have those things, it is either impossible or very difficult to navigate the business environment. So a small business person who wants to get into fintechs or wants to get into digital, they need that support. And the last thing I'd mention there, which is a very, very important program, which we are doing with the World Bank, is the Caribbean Digital Transformation Program. It's a big program, $94 million US. Some of it is at the country level, some of it is at the national level. And at the regional level, we're looking at things like skills, digital skills, again, to go back to this issue of being a producer rather than a consumer. We're looking at things like digital finance. ECCB is leading on that. We're looking at things like cybersecurity. CARICOM Impacts is leading on that. We're looking at things as ensuring that your connectivity is reliable and that you get what you pay for. ECTEL is looking at that, okay? Because you don't want to be having, say, 100 megs, but you're only getting 50 and you're paying for 100. We want to make sure you're getting what you pay for and holding telecommunication companies accountable for the service that they provide. So those are some of the things that we're working on. More will come on this last project soon, because I think our plan is to make a formal launch somewhere around the end of the year, or before the end of the year.
Governor, you've given us a very comprehensive overview of this program of action, and it is very transformative. Tell us about what's next.
So what's next, Shana, is the fact that we still have a pandemic that's raging. And therefore, in pandemic economics, rule number 1 is to control the pandemic, bring it under control. So, a key tool in this pandemic is vaccination. And we have to be very clear-eyed about what it is that we're talking about. I don't think one could be neutral on this issue, because it touches and concerns lives and livelihoods. And by the way, I don't think it's life or livelihoods. I think it's both. They are inextricably linked. So, when I look at the numbers in the ECCU, as of October 14th, we've had just over 28,000 recoveries. Thank God for that. But we've had just over 600 deaths. And when you drill down and you look at the fact that around 97, at least 95%, in some cases 97, let's say at least 95% of those deaths are persons who are unvaccinated. It means that many of the lives lost could have been prevented. My heart goes out to those who have lost loved ones. I know people personally who have succumbed, and it's heartbreaking. And my view, Shana, is that too many people have died. Some of them in their prime. We're not getting them back. So let us control the pandemic by using the tool at our disposal. I think Pope Francis said, let us do it as an act of love. I agree with the Pope. Let us use the tool as an act of love, first of all, for ourselves, and if not for ourselves, our loved ones, our countries, and our currency union. Let's do our part. This is a fight that we must win and can win, but we have to do this together. So when you ask me what's next, we will press on with the program of action, but the immediate first task is to end this pandemic in the ECCU. And yes, COVID may be around for a while, but we can bring it under sufficient control where we can coexist, we can get on with the business of living, the business of educating our children, the business of growing these economies again, the business of creating jobs and a secure future, and ultimately shared prosperity. And that is what we are committed to at ECCB, and that is what I want to encourage everyone in the ECCU to commit to as well.
Governor, thank you very much for sharing with us on ECCB Connects.
Thank you.
That's it for this episode of ECCB Connects. Thank you for watching. Be sure to connect with us next week for another program where we'll share with you who we are, what we do, and how we serve you.